Hello, fellow traders. 'Tis I, the Rumpled One. It is Tuesday, December the 5th, the year 2017. Pivots and missed pivots. Why am I talking about pivots? It's one of those numbers that is derived by a formula. I guess there's different kind of pivots. So it's almost one of those voodoo type of indicators in a way. But that being said, many traders rely on it. And so what we want to be able to do is use that to our advantage. So that is why we're going to talk about pivots today. But first, let's take a look and see here how our euro is doing. As you can see, there's still these gaps. It hasn't been filled yet, and there's probably, looks like it might be a good chance it's not going to get filled, because it looks like the euro wants to break out of this lower wick zone here. And in fact, the low was 118.07. And so it actually has broken out. Now, it only broke out by a pip, and some people will call that a false breakout. But no, it's one of those things that's like saying a false pregnancy. No, it broke out. It didn't break out much, but it broke it. If it was glass, it was broken. It wasn't false broken. So, I hate those type of wishy-washy, unclear, imprecise use of the language. So it broke out. That being said, weekly, you can see here we're 46 pips below the open. We look at the daily. Once again, it left the lower wick zone, tried to leave the upper wick zone, got in there to the north, it left it to the south big time, went right through the lower wick zone. So those of you wick zone traders, where is it? Right here. You were rewarded. You were rewarded here. You were rewarded here. You were rewarded there and there and there again. So once again, simple horizontal line trades. And as you can see, we are 61 pips off the high, only 8 pips off the low. So you green rats, you might be thinking about going long. And you buy zone traders, here's the daily open, there's the weekly open, a trigger there. And you probably would have stopped out if you didn't take it. Trigger there. Once again, if you didn't take it, you would have stopped out. As you can see here, it couldn't get higher. So that was an indication if you went in a second time, it's like if it doesn't break there, then you better just bail. And see, once again, here it got in the zone, didn't break it. That's the market telling you the direction is this way. So those of you who waited for a weekly open cross, right there, it touched it. You might have taken heat that time, or you might have had to stop out. But once again here, it came down, paid off. Here, you might have taken heat, but then again, it paid off. So there you go on the weekly open in the buy zone. Okay. And then the rats. Here you go. Should be obvious to the viewer. Any short here or here paid off. And a long here, price action. And you can see I'm using M15 candles. M15. So we've got a red candle followed by a green. Right here, top of that green candle. I should probably change properties. Let's see. Bar up, bar down. Yeah, it might be a little bit easier to see. You can see right here, Red candle closed, green candle, trigger at the high was worth pips. And you can see this same situation is happening right here live before your eyes. Okay, let's look at the pivots. I guess I had that wide for a reason. So here's our daily pivot. Okay, and there's S1 and there's S2. There's the yearly low. No, yesterday's low, yesterday's high. So you can see once again a breakout. And there's R1, S2, S3. Now, how do we use these? Well, there is something that I added to this indicator. And it says show future pivot point. In other words, if price were to close right now, where is the future pivot point? You see it's right here. Price likes to hit the pivot. So if you know where the future pivot point is back here, then you can start trading towards that pivot point. Now, how do we know this? Okay, I'm going to bring up one of my price analysis screens. In this case, it's the price travel indicator or price travel analysis, or price travel analyzer is what I call it. So what we're doing is we're going to look at statistics for the last 100 bars, and in this case last 100 days. Open above the pivot and the low below. And so right here, if the open greater than the pivot out of the last 100 days 50 times, okay, out of those 50 times, low less than pivot was 37. So you've got basically a 3 out of 4 chance that when price opens greater than the pivot, the low is going to be below the pivot 3 out of 4 times historically. Now that's not probability, that's historical statistics. In trading there are no probabilities, they're statistics. Okay, when you play dice or you're playing with cards or you're playing with coin flips, you have probabilities. When you're trading, all you have is statistical information based on the past. That's a big difference. You have to make that precise distinction. Even though the math for probabilities and statistics is the same, one is dealing with future data, that's probabilities, versus one that's dealing with past data, which is statistics. Okay, that being said, let's move on. Open below the pivot and the high above, once again, we've got the same numbers, 50 and 37. So you're wondering, wait, why is this number bigger? Because you see, I filter out the data, so out of 50, we've got 37. So if you double this, if this was 100, this would be 74. So this number, so it's this number here, 37 over 50 gives you the 74. So you don't have to do that math in your head. And okay, we've got a few of my plotting indicators. So this one is showing you missed pivots. So if it shows you this display, it means it missed it. But you can see here, this one crossed. You see this one hasn't been crossed. Now you see this one here, it missed it on the day, but the next day it got hit. So over here, these are all the missed pivots on that particular day. These are the ones that have been missed, and it went back to April 24th. So some of these pivots don't appear over here because they have been hit, but they weren't hit on the same day. These days are the open pivots or pivots not hit, pivots not crossed, whatever you want to call them. And these little purple dots, those are the daily pivots. Okay, and if you're wondering what these indicators are called, we've got the mid dots is showing the dots. The missed pivots plot is the ones that are plotting it. Missed pivots is this one over here. I know it says the same thing at the top, so that's why I'm showing you. And then template names there and buttons are down there. So this gives you the analysis, so you can see here you've got a good chance. But so out of since April, you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 pivots that didn't get hit. Now, of course, if you're holding on to this trade and you were short, you're in big problems. Big problems, because it's a 1,111 pips above that pivot right now. So negative red, negative sign means it's below those pivots. So you can see here, this one from yesterday, we're 75 pips off the mark. So that being said, you can use this to analyze whichever pair. One of my favorites is the yen. Once again, high probability of taking out those pivots. Basically, looks like 3 out of 4 times. Okay? Now, but this is, so we're either going to open above the pivot or we're going to open below, unless we open right on. But you can see here we didn't have that situation. So that's one way that I analyze these pivots. Now, we can continue on and we can use the real-time price analyzer. And what this does is it tells you in real time where you are, and based on the last 100 bars, how many times these situations happen. Okay, so you can see here, you can put a note in the indicator, and I just left it, the input, just your note here. You can write yourself a little note, and you can also have more than one instance of the indicator. And how I do that is, you can see here it's loaded twice. Indicator tag, it's just, and so if you want to do a second one, you need to bump that number up. You can, it's just an integer, so you can just make sure it's different, so that way the indicator knows not to take away those objects off the screen. If you're a programmer, you understand what I'm talking about. Okay, let's put this back to the euro. And so, the real-time price analyzer. Now, so you see here, ask is below S1 and S2, and bid is above S2. Okay? We've got the midpoint showing here. I'm wondering why we don't have the other ones. HL5. There might have been a reason for that. I didn't turn it on. That's the reason. And as you can see, it loads it up. So right now, high greater than S1, S2. Out of the last 100 days, 100% of the time. Close greater than S1, S2, 85. Close less than S1, S2, only 15. Okay, close greater than S2, 91. Close less than S2. And so, based on where price is, it looks to see which of these to analyze, if I do remember correctly. So you see here, we can go all the way from R3 down here, and if you want, there's even R6, so you can decide for yourself which of these you want to analyze. But it'll pick the ones that are closest at the time. So right now, based on where price is, It's looking, we've got S2 above, it's falling below, and you can see it just changed there.